What's going on? Welcome back to the channel. Today we're going to talk to you about SoFi. I want to go over some of the data points, what moved it, and go over everything else that you need to know. But first, make sure you guys hit that thumbs up. And with that, let's get right to it. So SoFi did go down 2.4%, kind of extending it a little bit further, down another 1.29%. And that is largely because of Meta and Microsoft not really doing that great for their earnings. 30.14 the low, so that was because of good old Powell. So Powell strikes again. And then 32.57, so a new 52 weekend all-time high was hit today, and that was because of this. So we did get a rush of new ratings. So the bears are kind of sticking to being bearish, and you have the bulls sticking to being bullish. So you still have that crazy divide, but for instance, Tim, KBW, did give a $20 sell, and he just gave a rating on October the 14th. This is why there's absolutely no logic to giving a rating before a company puts out their earnings. So he recently did bump it from 14 to 18, and now from 18 to 20. You had Bank of America striking straight away yesterday, 17.50 sell. Analyst has a 62% success rating, but you did see a lot of bullishness. So you had a $35 buy, new highest rating for SoFi ever, $38 buy. Mizuho, Dan, who has a 49% success rating, 37 buy, and so forth and so forth. So generally speaking, good stuff. So as a consensus over the last 3 months, 25.57, still representing a 17.25% downside. And I think it's just because of these bearish ratings really holding it back. So at the end of the day, it is what it is. Most likely we'll still get probably a good 2 or 3 new ones, most likely. But I think for the bulls that did give ratings, I kind of feel that these are fairly realistic. So 38, 35, and 37, so forth. So let me know your thoughts on that. Kind of unrelated to today, but I've received a couple comments on why analysts give some of the ratings they do and how are they judged. So for instance, if we pull up Dan, who has a 49% success rating, he is now the highest for SoFi. So similar nature, Palantir had Daniel Ives. So when Palantir was starting to really go higher, I believe it was even at like $30, he gave like a $50, $60 price target, completely out there, right? This is why Daniel Ives and, for instance, Dan Dolev has a pretty bad rating, because they give very optimistic price targets. Sometimes they hit, sometimes they don't. So at the end of the day, that's why you have him having a fairly poor success rating. Whereas, for instance, if you have someone who gives more on the lower end, let's say $23, $27, they're playing it very safe. And I think they're just doing that to give themselves a higher rating. That's just my opinion and from the research I've done. But that is completely unrelated to today. But aside from that, though, the big thing for today was interest rates, and we got the 25 basis point cut, although it was kind of more of a double-edged sword. So we got that, but we also got some negative tone from him afterwards. So Powell kind of did strike. And so essentially you did see him saying that they haven't really made a decision on December's cut. If anything, what the Feds are now seeing it as is neutral. They are neutral. So from here, we could potentially even humor a rate hike or cut. It is all going to be on the dependency of data. And the bad thing is, because of the whole shutdown, there's not really any data to justify anything. So he was still very fearful over labor. So that's one thing that he's been kind of consistently bearish on for a while now. And aside from this, though, one thing that he also did bring up that kind of spooked to the broader market was this. So Powell somewhat acknowledging rising defaults in subprime credit. This is also another warning that came out from, I believe it was the IMF, if I remember correctly, saying that Europe and the States, kind of the personal credit is very teetering, and so a lot of reference to 08. So definitely not the greatest by any means. And I think generally this kind of hits home to what was more of a risk from SoFi's earnings. So you did have this, I brought this up in my video yesterday, but management acknowledges ongoing vigilance around credit performance, rate environment, inflation, and blah, blah, blah. Noto stating that I do worry about things like credit. I do worry about things like heightened inflation. So clearly credit quality is a big concern right now in the broader market, and especially to Powell. So of course, that's one thing that really spooked a lot of the market and what really brought SoFi down. Aside from that though, you did have shorts increase about 119,000 shares. 8.53% of the free float is being shorted, works to be 100 million shares overall being shorted. So shorts kind of took advantage a little bit, but then again, as I brought up in the past, there's more than enough ammunition. Like there's about more than 10 million shares available. If they really thought that this was the end all be all, they could easily double, triple, quadruple down, but they're not. And so I see this as just them just doing their trades as per usual. Looking at the options, 111 million in calls, 14 million in puts, 47% of all the options being done were bearish in nature. So most stocks were kind of similar type of picture, very bearish overall. From a bull standpoint, you see a consensus for it to kind of be between that 31 to 31.50 by the end of Friday. Bears are anticipating for it to kind of pull back to that $29 to $30 range. So a little bit evenly divided where we are. These are some of the transactions that did occur on the secondary market. So this is why I always bring up data, because technically, if you look at this, big money was buying up SoFi. Just algorithmic trading is an extremely powerful force in the market nowadays. I think people just still either don't understand it or they just kind of downplay it quite a lot. But generally, if you look at this, you see a lot of institutions buying up SoFi, even some of the big ones right here, 62.5, 21.5, 10.5, 6.7, and so forth. So feel free to pause the video and obviously go through this. But moral of the story is big money was buying SoFi, sees clearly a lot of good value. The bad thing is algorithmic trading was feeding off of the negativity in the broader market. These are some of the transactions, the large ones on the dark pool. So large one was, or largest was 8.2, 3.09, 2.4, 2.3. Most of that, to be honest, was after Powell and while Powell was speaking. So based on the price action, it's fair to assume that hedge funds were kind of the culprits on what was kind of selling out. But with it at 30.90, it is trading currently right above this R2. So 30.89 is going to be that key pivot. Of course, after hours today, we're going down a little bit, but still that's low volume. So I wouldn't really consider too much validity to that. So 30.89 is going to be that key pivot, moral of the story to kind of watch for in the next couple of trading days. Aside from that, on the actual chart, I kind of pulled up here some of the ratings. So you can kind of just pause it if that's your thing, just to see, for instance, Mizuho rating it from, or raising it from 31 to 38, 27 to 35. That's a pretty substantial increase. 29 to 36, 28 to 37. So clearly analysts really did like SoFi's earnings. So when it comes down to it, you have not really too much negative things to really bring up about SoFi's chart, aside from it just being overbought. So I think this is why you're going to get some potential overreactions in the broader market. No different than what happened right here back in September when we started to get somewhat fearful. You had AI largely being the culprit, what did bring SoFi down today. So in reality, you might see a little bit more of a rollover of this fear into the next couple of trading days. We do have a lot of big companies as well putting out their earnings tomorrow, so it should be an interesting time. But nonetheless, comparing yesterday to today, you see a little bit more willing sellers and potentially a gap that could be brought down to around that low $30 range. So at the end, that's actually, on a side note, kind of the low. So the low was 30.14. So kind of bounce off of that general area. So when it comes down to SoFi, I'm not too concerned about a little bit of consolidation. Still, analysts are very bullish. You saw a lot of institutions truly buying it. So if you do believe in SoFi and what they're trying to accomplish, bigger picture, then take advantage of these dips. It's rather comical how the market sells off and people just instantly just forget everything that they've, like their due diligence and whatever, and they just panic and they sell out. So definitely, I think SoFi, you're going to see a lot more volatility, but bigger picture, it is going to really be moving higher. And this last earnings was very telling on that. There really wasn't all that much in articles. I would have been like, I know I was assuming a lot of articles would be coming out talking about SoFi's earnings, but clearly just people are focused on Powell and just now probably Meta and whatever else putting out their earnings. So let me know your thoughts on SoFi. Give yourself a shout out. Did you buy more? Did you lock in profits? What did you do with SoFi? One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Pop over there, take a look. I put out daily day trades, numerous swing trades. So link to that is in the description below and also the comments. With all that said, appreciate all of you watching.